Welcome back to another YouTube video today, and we're going to be doing a stock market portfolio update video. And I've hurt my hand. It looks so annoying. Like, I've did it in football. Literally when I got back from Indonesia, I played football and it got taken out. Luckily it just sprained. It's not too bad of a sprain. Did my knee and everything, but yeah, not the best at all. And yeah, I didn't manage to do a portfolio video last week. I apologise for that. But hopefully we can show you, well, there's been a lot of progress with the portfolio this time around compared to last time, which is mental, massive jump to be honest with you. The stock market's been going crazy. But yeah, if you do want a free factual share worth up to £100 on Trading Till 2, then you can click the link in the description or use my code BEN on the promo code section on Trading Till 2 and you'll get yourself a free factual share worth up to £100. So yeah, it's been a crazy market at the moment. A lot of people obviously taking profits now because I personally do see a correction. I don't see how it can just keep going up as it is at the moment. Obviously we've got earnings season coming up. Most of the stocks that I'm holding will be having earnings in the next 2 weeks or so. So that's going to be a very interesting thing to see how things change and how things react. And obviously the big one, the big talking point, Palantir, what's that going to do? How's that going to react? Because obviously it's stupidly overvalued on them metrics at the moment. And obviously it's that whole question, do I take profits and things? And it's like, yes, don't get me wrong, I could probably sell quite a bit of a portion now and then buy back cheaper. And there's probably a high possibility that's actually going to happen. But it's also one of those where if I do that, what price do I buy back in? Do you know what I mean? Like, what price is the price to buy back in to get more shares? Because I want to have the same amount of shares as I do now. So, and the thing is, a lot of people have been talking about this since 70, 80, 90, 100, 110, $120 sell then, and it's just kept going. And I'm not saying it's going to keep going. I think there's like, there's the chances of that is just not really going to happen. The more likely scenario as well, could be as well, is just it just trades flat or trades between the 100 and the range it's in at now. That could be a possibility. But I've always said I'd buy more stock at $70 if it dropped to there. So yeah, we'll see how that does. But let's get into the portfolio. So the first one we've got is AMD, and we're up 41% pretty much on this. Obviously we'll probably be up a bit more on when it comes to, because the FX impact taking it out, so technically we're up 44% on this. But yeah, absolutely smashing it. The PE is 114 currently, and obviously if you look at its forward PE, it's going to be not 114 by the way, because the revenue growths are crazy at the moment. And what the market, the data center industry could reach, 500 billion, Lisa Su. Yeah, that's pretty mad to think about, because that's a massive market to enter and be a part of, and hopefully MD can get into that. And that's one thing I want to say. So the MI355 delivers 40% more tokens per percent than Nvidia Blackwell. So that's a mental stat to see. And on top of that, they are really pushing and concentrating more, instead of the cloud side of things, more on the edge inference. So what is the difference between the cloud and obviously the edge inference? Well, obviously it will happen in real time with the edge because it's using the chips. It doesn't have to go straight to the cloud and obviously go through the cloud and wait. And then obviously it can work offline as well. So that's a massive thing. And obviously it'll be used in things like, let's say, autonomous driving. So in the Teslas, because they can't be using the cloud and going from the cloud to that. It will need to happen in real time, instantly. And that's what edge inference will actually do and be able to compute. And that's what AMD are really focusing on, and that's what Lisa Su has been discussing and talking about quite a lot. And then obviously they'll have like the MI500, which will be even more powerful, and there's just going to be obviously that scaling and that, well, there's just always going to be a product that's going to be better than the other one. And obviously all these companies are going to be wanting the best and the most efficient. So they've got a big roadmap for the next few years, so just keep making more money and the revenue to grow. But yeah, AMD's looking very, very solid. I know, sorry, I've probably rambled a bit and gone into a few different little things. I'm trying to like simplify it as much as I can and condense it down as much as I can. So yeah. Fubo, we've got the skinny bundle coming out very soon, I believe. Hopefully that will obviously pick up some sales. We've got 114%, we're up on this. And yeah, I'm holding this. We'll see how long I hold this for. Obviously, I do think we've got a lot more room to go with this, with the growth. And yeah, we'll have to see at the end of the year how things go. Obviously, they're wanting to go into, they want to reach profitability, and that's what they're focusing on. And then once that happens, they'll obviously start scaling up with the marketing and really pushing it. Next up, we've got Grab, and this one's been killing it in the last weeks. Nearly 7% in the last week. We're up 2.55%. We're finally up, and I'll be honest with you guys, we were down on this quite a lot, and obviously we're down on the FX impact, so we're technically up 9% if the FX impact wasn't there, but we were down on this for a while. There's a parts of that as well because I wasn't averaging down, because I was focusing on SoFi and AMD. Because I wanted bigger positions in that at the time, so I couldn't average down and bring that down to then obviously get to the point where I was going to be up on it, because we could have been buying it at the low $4. But yeah, it's finally started making a bit of a move. Grab is a bit of a weird one because I think it is going to need obviously the typical the earnings. They need to smash the earnings, show crazy growth. And then it will start hopefully picking up. Obviously they got a lot of cash. Everyone's thinking, what are they going to be doing with that cash? Are they going to be doing some mergers with GoTo? Yeah, obviously I've used Grab and it was very, very good. I really liked the app when I was out there in Indonesia, and yeah, very, very solid. And the service was great, to be honest with you. As soon as you step out the airport, you just have these people obviously promoting Grab, saying, oh, if you use this code, you get obviously a certain amount off, and then they help you with your luggage going in. And I know that's only just going to be at an airport. It's not going to be when you just order a Grab, because that's not what it was like when obviously you get a Grab in a random spot. But it's just very, very well organised and run the app. And also when you go on Uber out there, obviously you can't use Uber, they will promote Grab because obviously they got a stake in Grab. So Nike, we're down 2.5%. We're down a lot on this, and obviously I would have, like I said, same again, I would have averaged down if this was a position. I know I've only got £16 in this. If you're new to watching these videos, I've started doing a thing now where if there's a stock that I like, I'm going to buy it just to show you what I would do, and I will now start like averaging down like in small amounts just to show you like where I'd kind of be buying. And obviously that's what I've been showing in my premium channel group on Discord, showing you obviously my live buys and also sells of when I'm selling stocks and buying stocks. Obviously at the moment it's more buying than actual selling because I'm a long-term investor, but yeah, that's what I've been getting up to, and this is what I've been sharing with you guys in the premium channel. And yes, I'm down 11.2% on this, and Oscar I think's great in my opinion. Like if we scroll down, PE ratio of 27, and then if you look at the balance sheet, they've got a lot of cash, by the way. I think they've got about 3 billion in cash, but total equity is about 1 billion. Yeah, so the price to book value, it's about 2.5 times, which is solid. Like for a growth company, that's in my opinion really good. So in simple terms, like if they were to sell up and get rid of all their liabilities and sell their assets, all the shareholders would be left with about 1 billion. And so if you were to buy this company today, it's like worth on paper like 1 billion, but obviously we all know people pay multiples for companies because obviously future growth, future earnings, and things like that. So what I looked at and saw on their investor relations is this, and I've put it on screen now, is their EPS in 2027. And bear in mind, this is a health company, so there's a lot of risks to a health company in the sense of the government can get involved and change obviously their government standings, and that's what they're doing with the ACA situation at the moment. Yeah, so the Affordable Care Act made by Obama back in when he was president, obviously he tried to make healthcare more affordable, so when you would pay for your healthcare, you would pay $50 and then the rest the government would pay like $450. So there's going to be changes to that, and obviously it's going to hurt Oscar, and that's why Oscar's been getting hit hard. But the CEO and obviously the management team, they've executed all the time, most of the times with their earnings. They're very trusted, and they're saying, regardless of even all that, with obviously their other business models that they've got, and also what they're predicting that and they're still going to get an EPS of $2.25, which will, if you did the maths on today's price, that will mean the P ratio will be about 6, which is insane for a company that is growing total revenue of 20% a year. So, yeah, I think Oscar's a good one to go for. Obviously, this is not financial advice. This is just something I'm looking into. And there's a lot of risk to that. But the risk to reward seems very high, because if they can get a 30p ratio, you could look at it being $40, $50 in 2027, if they get the EPS that they're saying they're going to. And obviously they're going to get margins of 5% in 2027. I think this year it's going to be 2.5%, so doubled in 2 years, pretty impressive. So if their margins can keep increasing as well, do you know what I mean? Like, they're executing well in that sense. So yeah, Oscar, by the way, as well, is a health insurance company and also a technology company as well. So they have a bit of everything. And what's really good about it as well, you can just like get doctor advice on the go, literally 24/7. And then you can obviously get your doctor appointments through it. You can search for doctors around your area. There's a lot of things. It's like just you can obviously order your healthcare, and yeah, it's an all-in-one app situation, and yeah, it's really, really, really interesting to see. And also they sell their software to other healthcare providers, insurance company providers as well on top of that, and that's how they also make money. I've very briefly gone over what Oscar is, because otherwise this video is going to be very long. Palantir, so this has had an amazing week, up 8%, and we're up 678%. This is the most I've kind of been up, to be honest with you. Yeah, £62,443. Yeah, Palantir, mental. And this is interesting as well. So President Trump will announce today $70 billion in AI and energy investments in Pennsylvania. Among those slated to participate are BlackRock's Larry Fink and Palantir's Alex Karp. Very interesting to see, and Palantir actually reacted quite well on that news, to be honest with you. So that could be a reason for the rally. And also we're going into earnings, and it's very, very close now for Palantir's earnings, which I'm so excited for. And then Snap, obviously this is one I've been talking about a lot. It's up 10% this week, and we're up 26%. I think Palantir, I think Snapchat's got a bit more to go. Upside could be potentially another 40% upside, but we will see. I'll keep an eye on this, and obviously I'll keep people updated on what I'm going to be doing with Snapchat. But I want to kind of go into the end of the year to see those earnings, because I think that's when I'll be able to capitalise on selling at the best price. And the reasons for that is because their earnings tend to be a lot better in their later quarters, because more people are paying more money in advertisements, in AdSense. SoFi Technologies, I'm up 72% now, absolutely smashing it now with SoFi. This was a bit of a dead stock for a while for people, and yeah, we're up 72%. I'm loving SoFi a lot. Obviously, you guys know how much I like SoFi and how much they're growing. Everything's going very well with SoFi, and their loan business platform is really, really, really good, and they got some exciting things coming out with obviously crypto, and yeah, all sorts really. So yeah, we'll have to see how things go, how they execute, if they keep going, which I think they will. They've always done well with that. And if interest rates go down, obviously that will react quite well for SoFi normally anyway. I'm not guaranteeing that, but yeah, I think short term obviously it could easily go back to $15, so yeah, but obviously I'm in here for the long run. I've put my predictions on where I think this is going to go, and yeah, I'll be holding this for another few more years. Tesla, up 5% on the week, up 45%, and this is a bit of a crazy weird stock because obviously you've got Elon Musk constantly getting involved with the politics and all that situation, so you've got to be very, very careful with Tesla, but obviously we all know the potential that Tesla has, and yeah, that's why I'm in it. But going back to obviously the Oscar situation, at the moment, obviously it's down a lot, been beaten down quite a lot. I would love to have a massive position in this. A big, I say a massive, I don't want to say like crazy big like SoFi and AMD. It'd be more like a grab kind of position. I would like that. I just don't have the money to do that. And also if I did have the money, it's like, that's another stock you've put into your portfolio. And like I say, I like to have a small allocation of stocks because you can concentrate on them more. Because it's really hard to keep, if you're picking all these individual stocks to keep up with everything, it is really hard. And on top of that as well, your money just won't compound as quickly. I know you've taken on more risk because you've got less stocks, but like for instance, the money that I've got in SoFi and AMD, that's going to compound a lot because of how much money there's in there. If I scatter that across 20 different companies, it won't go as far. Like even if I put $1,000 in and Oscar went up 3 times, which is insane, which is unheard of. Like that's just crazy. But these type of growth stocks can. That's £3,000. Do you know what I mean? Whereas if I had a bigger position, it'd be different. But anyway. So on the week, I'm up 6.7% and I've got £140,928 in the investments. Pretty mad. Pretty mad. If you did enjoy the video, hit the subscribe button and also give this video a like, and I'll see you in the next video. And hopefully, do we see more green? We'll see. But yeah, like I say, Oscar's one I'm really trying to research and look into more.